Hello everyone, I wanted to go over the general ledger with you. The video I posted before this was for the general journal, which you can see off to the right hand side of your screen. The general ledger is made up of each of our accounts. Of these accounts, we have numbered in our chart of accounts based on our rules. So our assets are always listed first, then our liabilities, then our equity, then our revenue, and then our expenses. And they're numbered according to each business. As long as they're within those certain numbers, there's no hard rule as to cash has to be 101 or 100. So I have created my general ledger based on the accounts that I've used in the general journal. So I have them all listed here. The process in which we take our transactions from our journal and enter them into our general ledger is called the posting process. Because what I'm doing now is I'm taking this information from my journal into my ledger. Because if we think about the T accounts and the expanded accounting equation that you've worked on, it was really difficult to find information quickly and or a balance without having to foot our accounts at a specific point in time. These are called a running balance ledger, in which we will maintain a continuous balance after each entry. So for example, again, we would list our date and our year. So again, it's just as easy to enter a text box here and move it up within that date. Okay, again, we're going to put our April, and our first transaction is involving cash, so we're going to put the date. And I usually put like owner investment here. The posting reference allows us to cross-reference our journal and our ledger. What that means is that I'm going to put the source in which I obtained this transaction, as well as you see there's a PR column in the journal. Again, I'm going to reference where I posted my entry. So for this one, it's page 1 of the general journal. Now, depending on what book or what professor, it would indicate just to use the number 1 or GJ1. So for this instance, we're just going to put page 1 because that's where the information is in our journal. We know that it's a debit of 110,000, so we're just going to enter our amount here in the debit column. And my balance, it is the balance of $110 in my ledger. I'm sorry, I have a sore throat today. Then I'm going to take this account number 111 and I'm going to enter that amount back here. And since I copied it, I'm going to have to just insert a text box here with 111, and that indicates that I have in fact posted that side of the transaction. I will caution you in that I would post at each transaction, not do all your transactions and then go back and post. And don't put your number in until you have posted to the ledger. That will get you into some trouble. So let's finish off this transaction. So we also invested cash, or equipment, sorry. I'm not going to put the year on for each one of these, but you should do that. It's the first, and it was the owner investment. It's from page 1 of my journal, and it's a debit amount of 12,000. Okay, so I'm just going to indicate that here. So that way, if anybody pulled this ledger, they would know that the owner invested $12,000 in equipment. So now we have both sides of the debit posted. We need to indicate your account number here. So that was 141, and you will just be able to type right into your journal. I copied it so that you could see this all in one page. Now I'm going to post my capital. Again, it was April 1. Oops. And again, owner investment. I could type today. Page 1. And we know that my owner investment is a credit because not only is it on the credit side of our entry, but we know at this point in time that my capital is a normal credit balance increasing on the credit side. So we're going to enter our amount of $122,000 in our ledger for our capital account, and it stays on the credit side, so we're going to enter it on our credit side of our ledger. Remember, this is not a negative balance. It is just that it is on the credit side. It is a positive amount. It increases on the credit side, decreases on the debit side. This is the way that we keep our accounting equation in balance. Okay, so my capital number is 311. So I would then come back and I would put 311, and I have now posted that transaction. Okay. What I want to do is I want to jump down to this truck transaction because I want to show you how this continuous balance occurs on the ledger. So we know that on the 12th of April, we purchased a truck for $12,000. Okay. So we're going to go over to our truck, and April 12th, purchased. Again, it's page 1, and it was for $12,000. So we're just going to put that here. Oops. And my account number is 151. And I'm going to put that right here. Okay. Now on my cash, I'm going to put the 12th, and we're going to put purchase of truck. Again, it's page 1. And I am decreasing my cash, so it's going to go on the credit side. I've written a check. Okay. And my balance, however, is going to stay on the debit side because it is a normal debit balance. And I'm just going to reflect the difference between my debit balance of $110,000 less that $12,000 that we paid out. My balance is $98,000. And I would then put my posting reference in for 111. Okay. And see if it's cooperating here. There it is. Okay. So that is how we post from our journal to our ledger, and that these are a continuous balance ledger, indicating that we know our balance for each account at any given time. I hope this helps with some of the problems that you're going to do for homework this week, and also a good overview of how we post from our journal to our ledger.